G'day, welcome to this week's video. This week we're going to talk about retirement savings and I suppose providing a bit of an overview of what we're doing for a lot of clients to give them a bit of an idea on how long their money may last. And this is a key question that most people in the back of their mind, even those with substantial wealth, is how long will my money last? Should I expect it to grow, or will it go down over time? And will I have enough to see me through? So a lot of the figures that we're doing is, say someone's retiring at age 65, the lady in the house, we are doing our calculations right through to 93. We need to take into account their, obviously their spend each year, and that might be if $50,000. We take into account their asset allocations, so are they a growth portfolio, or balanced, how is that weighted? Because that really plays a huge impact on the outcomes for the clients. So obviously the higher weighting towards shares and growth investments, the more potential the fund has got to grow. So for people retiring at 65, it obviously depends on what the lump sum is. If there's $600,000, our calculations will show what will happen from 65 right through to 93. And the figures that we're doing is based on say a pessimistic outlook, and this might be this line here, and then there's a more moderate outlook. So if you've got a balanced fund, we might expect to receive 6.5%, but in the most pessimistic outlook, we might be receiving a return of 3.1. So this is the worst case scenario if things go really bad. But even under the worst case scenario, does our money last past the expected life expectancy? So these are some of the figures that we're working on. It allows us to manipulate the figures each year. We might say, geez, it's been quite positive, we're sitting up here and we're not, the returns have been quite sound. That's where we may have flexibility, that income can go up to $55,000 per year. And that's where I think it's very important that if there's capabilities and people have the funds and the money seems to be lasting longer, they may be able to spend a little bit more. We can also factor one-off holidays every second or third year into these calculations. So it really gives people an idea on how they're tracking based on what their lump sum is at the moment, and pension rules as they stand. That's Centrelink age pension rules are all taken into account the calculations. So people are finding this very interesting, and if you'd like to come in and sit down and have a look at this, yeah, you're quite welcome to do so. Particularly for current clients. Yeah, thanks for listening. If you liked the video, please hit the thumbs up down below, and really appreciate that. And if you've got any ideas of any other topics you'd like me to cover, please let me know. Thank you.